Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's shift to the gold market. On the gold market situation, a bit tricky because we have some contradictional moments here that we have discussed. Since from the classical approach that looks like the bearish continuation pattern, that's the flag, first thrust down, retracement, reestablishing down thrust, flag. That is in general based on the classical framework of the technical analysis should lead market to the downward acceleration. But the problem was here is that on the previous week we've got these 3 in a row potentially bullish Jordan patterns, and that called it as the stop grabbers, because here market is trying to shift trend to the bearish side but has failed once, second time, third time, 3 times in a row. And usually the idea of this pattern is that when traders take their short position by the MACD crossing, and later within the trading session market has failed to confirm this trend shifting, they have become on the wrong side, since they have entered short with the taking short position, but by the end of the day trend still remains long, bullish. And usually these patterns leads to the taking out of the previous highs, where traders usually place the stops when they take their positions. But after the 2-3 trading sessions, we see that market hasn't even started an attempt to continue move higher, according to these patterns. Another moment here that I do not like very much is that you can see that trend holds bullish, but price action doesn't confirm that, just stand flat. Market, as I said, hasn't started to move with the upside with these patterns. And now we see that market even trying to break this flag to the downside. That's the warning sign for the bullish setup. On the 4-hour time frame, previously we've got another 2 patterns that assume the taking out of these highs. And we said that could be probable some kind of the ABCD action to the upside, especially if we'll take into consideration these strong candles to the upside that could lead market higher. But by current moment, this top was just 618 extension, minor extension of that ABCD, A, B, C bottom, and market has turned to the significant retracement. That is not quite common for ABCD development right up after the 618 extension. That's not normal. The market shows the significant retracement after just hitting of the minor target. Also, currently market is re-raising of this stop grabber, and in general this flat and downward action is not natural for upward development. That's the tricky moment currently. Also take a look that the market has moved below the weekly pivot point. If we will not have the FOMC meeting right today and tomorrow, in such circumstances I probably say that we should search the possibility to enter short. But since we have the FOMC meeting, that could be some kind of the closing of the position before it, and with the FOMC meeting some volatility could come, and in general market could show any action that is possible. But in current environment, since market doesn't confirm now our bullish ambitions and doesn't show any price action that we want to see when the market shows the upward development, I think that it's better to not take long position currently. At the same time, we have unerased, still valid patterns on the daily time frame that hasn't been destroyed by the market yet, so probably it's not the time to take short position also. And it's better to wait for more clarification currently from the market. Well, although in general it looks like more bearish situation rather than bullish, but as I said, the FOMC meeting could change anything. That's why it's a bit not very thankful job to make the prediction on the potential results of the FOMC meeting currently. But in general, this development not very logical to the upward development. What we see on the hourly time frame? On the hourly time frame, in fact, you can see that this develops as the triangle, and actually this move to the downside could be some kind of this ABCD action. So that was initial thrust up, that is greater than the previous thrust down, and that could be ABCD retracement after it. In this case, we should be focused on the 1370 area as the potential support. That will be a deep support of this ABCD action. It's about the 768 deep fib support, I suppose. If market will fail around this area, that could turn to butterfly pattern. So that could be the left wing of the pattern. That could become the right wing, with the extension and target significantly lower. Maybe even just we will calculate potential targets: 127, 1355, 1618, 1317. Sorry, not the 1618, 2618. Just a minute, we will estimate the 1618 target. 1618 will be 1346 area. So that could be this development of this butterfly pattern. If market will fail around this potential support area, that could be the target of this ABCD move. That is also possible, because gold market is rather tricky. Well, and here is a lot of pits and traps exist very often. So that's my opinion on the currently on the gold market. Speaking about the long position, well, if you want to, you could try to hold the position if you have entered somewhere based on this pattern or that pattern, because they still valid and hasn't been erased yet. And who knows, maybe market will turn to the upside currently, since this could be also the bearish trap. Market will show the breakout of the flag, but later return right back and continue move up. That is also possible. But if you do not have any position currently, well, it's better to not take any position, because this development is not normal. It's not looks like the natural development of the upward action. But to take the short position is also a bit early, although we have long-term bearish context on the gold market. But it's better to wait the breakout at least the 1370 area before starting to think about the entering short. The safest moment, safest way to deal with the gold market now is to wait the results of the FOMC meeting, of course, because despite whatever action market will show, we probably will find our possibility to take the position, and that will be much safer than to take the gamble currently, because it's a bit nervous situation on the gold market. Well, it's could come the huge volatility on the today and tomorrow trading sessions, so decide by yourself. But I think that it will be cheaper to you just to wait results of the FOMC meeting, or at least if you would like to enter short, breakout of the 1370 area to the downside.